Hello, my name is Eddie Tofbig. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Chicago wheat, Chicago corn, and Kansas City wheat. Hello and welcome. Now, before I start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or on any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, Chicago wheat. Okay, so there has and is a lot going on here in a relatively short amount of time. The most obvious ones have been the multiple contradictory head and shoulders, as well as the regular head and shoulders topping patterns, which gave targets and then the market took them away. However, the dominant pattern here is the fairly obvious bright red mid-February to mid-June bearish Andrews pitchfork. We're at this time in between the overhead bright red upper time, currently at 555.25, and the bright red middle time below, currently 498.25. Separate to this, two other features are now impacting the market. Firstly, the continuing impact of the declining purple neckline extension, currently at 530 even. This gently sloping lower neckline has been a proxy for an attractor for the market heading lower, and specifically, it also acted as a mid-May to mid-August neckline for a complex head and shoulders topping action. In this regard, I might just place some very early potential targets below for the complex head and shoulders top, of a primary target X down at 504 and a secondary harder to reach target X1 down at 474. As I say, this is early on, but I might as well do it now, and then if it is negated, I can easily retire the targets below. This leads on to the second feature, and is the 38.2% absolute Fibonacci line at 520.75. This is being challenged now, along with the nearby March 2024 low at 523.25. Both were challenged back in mid-May, and they held, though the breach low was quite significant in size, as shows how little we seemingly have underneath until the historical congestion support seen between 500 down to 495, along with the lower nearby 2016 to date uptrend, currently at 490.75. So the pressure is on the downside, but the downside has held in the past, though there isn't very much underneath it. Chicago corn. The dark blue mid-February to mid-April bearish shift pitchfork on my daily chart took over the running here from the earlier and at the time quite successful bearish Andrews pitchfork for the same period a few weeks ago. As you can see, it has been very good at showing the bearish angle of attack since it was created back in mid-April and fully acknowledged in June. Thus, right now we are in between the overhead dark blue middle time, currently at 413.5, and a dark blue lower time below, currently at 378. The market is currently moving down from testing and being pressured lower by the dark blue middle time from mid-July, along with its companion, and very interesting companion is the declining green short medium moving average, currently at 414, down to the low created in mid-July at 391.25 before changeover by the then dark blue lower time. And so far, it is bouncing up from this low, though each day the dark blue middle time and green short medium moving average will be squeezing between the available space between there and the July low. Eventually, something has got to give. We are indeed quite well within, as I said 2 weeks ago, and I quote, support of dubious strength that is fairly evenly spaced out at 409, 403 until the November 2020 low at 397 and this year's low at 391.25. There is limited support below this, realistically at 386.5, then the August 24 and then the 2024 low itself at 385 for a low, not monthly lows, but just a low from late 2020 at 369. After this, well, we have at the bottom of my daily chart the old 2006 to date uptrend, and that's currently at 349.25 and the end of the quote. Those support levels, and I suppose now some are resistance levels, well, they still work, and we are right now within their grasp. You can easily see that. However, as I mentioned earlier, the descending dark blue middle time and the bright green short medium moving average are limiting the room for maneuver of this market. This will become less and less and less until the dark blue middle time crosses down through the 391.25 level in the middle of October. I do not expect to see the market to wait till then. Rather, something will give way before then, I suspect. Kansas City wheat. The major pattern here continues to be, yet again, the dark blue February to March bearish shift pitchfork. A couple of months ago, it was not a great looking pattern, having both the lower time, currently at 460 3/4, and the upper time, currently at 555 3/4, pierced but not broken. Thus, both times continue to play a role, a more significant role these days, in showing the bearish angle of attack. And I should also mention the dark blue middle time, a little below the market, as this continues to be important. That's currently at 508 1/4. Interestingly, since May, we've had a new pattern emerge, though this has also been breached, though not as yet broken, whilst at the same time some older resistances and I suppose supports as well have influenced the market. The new pattern started out as one thing and developed into something else. You see, it started out as a double top pattern, Adam and Eve type, from the middle of May through to the middle of June. However, this pattern morphed into what was initially a small, though nowadays it is quite large, breached and repaired purple expanding wedge pattern, currently 511 1/4 up to 580 1/2. And I should also point out, as I said 2 weeks ago, and I quote, I'm beginning to suspect that the purple lower trend line is now working in association with the dark blue middle time. However, I still think the dark blue bearish shift pitchfork is the more dominant pattern. I would not wish to take anything away from it. End of quote. Thus, this pattern is still in operation. Meanwhile, looking nearby, we have overhead now capping the market a pair of dynamic resistances in the shape of the green short medium moving average, currently at 542 3/4, and a declining mauve medium moving average, currently 547 even. Just keep an eye on these, as they do provide immediate resistance overhead and one that is moving lower with the market. Now, looking even closer nearby, we have the 38.2% absolute Fibonacci line at 532 1/2 and a slightly lower low for August 2024 at 527. I've said all along that the August 2024 low was in turn created by that same 38.2% Fibonacci line, absolute Fibonacci line. These managed to hold up prices below over June and into July, as well as last week, but they are being severely pressured this week, enough that we may soon look at them as resistances, overhead resistances, rather than supports. This brings me to one final feature I'd like to draw your attention to, and is one that is rich in history. Just below the dark blue lower time, we have the unreconstructed December 1999 to date uptrend. That's right, an uptrend from last century that is still on my daily chart and highlighted in bright red, and it's currently at 505 3/4. Please keep an eye on this one, as it turned the market back up in the middle of May, though this time it does not have the dark blue lower time in attendance, though it does now have the dark blue middle time, so it's a balance out, so watch out carefully. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.